Hey YouTube, what's going on? Chris here. Want to bring you all an update today of Bitcoin and XRP. It's going to be on the one-day chart. We're going to be looking at this in the USD. And guys, yet again, we're at just a critical area for Bitcoin. We are still trading below that 200-day moving average. And what I've been doing, I've been going through a book. It's by Clifford Pistolese. It's using technical analysis, and it's really digging into moving averages and how important they are. And right now, guys, the moving averages are pressing down upon us. And what happens is the longer that we stay underneath these moving averages, the more difficult it is for us to get back up above that. You have to think of these trends as small rivers that eventually get into bigger size rivers like the Amazon. And once they get moving and that current gets moving, it gets stronger and stronger and stronger, and it's hard to break. So the more days that we're below this 50-day moving average and below this 200-day moving average, the more trouble we're going to get into. And guys, on this channel, like I said, I want to shoot it to you straight. I want to give you the upside, the downside, and the sideways. There's a lot of people say, Bitcoin's going to $1 million by the end of the year or $100,000 by the end of the year. What we need to do is just take price action day by day and work with it from there. Look at critical areas to the upside and to the downside, and that's what I want to do for you here. I hope to be somewhat of a voice of reason. I just purely want to look at this from a technical standpoint. We're not getting into any fundamentals about Bitcoin or XRP. This is purely looking at price action from a technical analysis standpoint. So that's what we're going to get into today, guys. If you get something out of this, if you like me covering Bitcoin and XRP together, like, subscribe, hit that notification bell, and we'll continue to dig in this for you. So first of all, we're on the one-day chart, and what we're probably going to do is even get into the 4-hour chart, and then the 1-hour chart, and then even the 15-minute chart, because what I've been doing is trading Bitcoin on the 15-minute chart. That's where I've been playing my positions, and right now, guys, currently I am in a short from about $8,200. I've been in it with a break-even stop right now, so I am sitting in some profit, just being very patient, very cautious, and I want to let this ride right now. If I have a break-even play, that's fine. I'm not upset about it, but I want to protect myself to that upside as well in case we have one of these BART patterns and all of a sudden we blast to the upside, and that's where you have to be careful. So for me, once I get a nice little profit to the downside or to the upside, then I like to put in that break-even stop. If I get wicked out or something, then it is what it is. I learned something from it and I didn't lose any money. So that's at least how I like to play it. I like to use tighter stop losses in areas where we're having small candle closes like we have been now, and we haven't been having the volatility that we've been having when we have runs like this over here. So that's what I'm doing right now. I was just sitting in cash patiently waiting, but I saw a nice opportunity. I jumped in on it, and right now we're in a little bit of profit. So that's what I'm doing right now. Guys, I would just be careful in this area if you're trying to go long, because if you're trying to go long where we're at right now, you have to be aware that the 50-day moving average and the 200-day moving average are acting as overhead resistance. When you're going long, you want to be up above both of these moving averages. Do you see right here how we closed the candle up above it around $4,700? We were up above the 50 and the 200-day moving average from that $4,700 all the way up till we lost this 50-day moving average at around $9,400. So that'd be a beautiful trade if you ended up buying in up above that 200-day moving average and then ended up selling out once you drop down through that 50-day moving average, or even down through this 200-day moving average. You can see where we had the close here. That's still $8,700. You had a beautiful multiple from $4,700 all the way up to that $8,700, and that's just if you're playing these moving averages in terms of the 200-day or the 50-day. Now, if you would have bought in terms of the 50-day moving average, you would have got in around $3,700 when we closed up above it, and we stayed up above it this entire bull market until we dropped down around that $9,500 or $9,900. So that's the importance of these moving averages. You can really take a big chunk out of the trade. You're not going to buy the bottom, you're not going to sell the top, but you're going to get that big meaty part of it that's going to be really good for trading, and that's what I like to do. That's what I'm looking at. And right now when I'm looking at the 50 and the 200-day, they're acting as strong overhead resistance, and they're also correlating with important Fibonacci levels. So the 0.5 now is acting as overhead resistance. That's at $8,479, and then we're also going to have here, guys, the 200-day moving average that's acting as resistance right in that area as well. In my opinion, the best chance we have if we are to move to the upside from right now, some type of a BART pattern to where a whale steps in and it doesn't make a lot of sense, but we blast up through both of these moving averages and this downtrend line. We've been having lower highs, which is also correlating with these moving averages. So right now the trend is down, guys. Please don't fight the trend. That's one thing I can tell you. I've done it before. Don't fight the trend. You want to trade with the trend. Now, area to potentially go long if we do get down to this spot, I'm going to look at the 0.618 at around $7,200. So that's an area where I would almost want to, consider closing my short, or just depending on what's happening, just continue to put that trailing stop loss in for my short and work it down until I see this area, this 7,204, because that's a spot where we may get a bounce off of. The 0.618, that's a golden area. A lot of traders look for that, and that's a spot where maybe we could find some bounce off this 0.618. And a lot of times, if you get a bounce off the 0.618, you can bounce back up to the 0.32, which would put us around $9,700, which would be good. That'd get us up above both of these moving averages. But right now, that's not the case, guys. We have to be very careful, and we have to trade with the trend. That's the opinion that I can give you. But in terms of a long, I'm looking at that 0.618, and then I would look down here, most likely around $5,800, $5,500 if we are to drop through the 0.618. Okay, now I'm going to get off this Fibonacci for us, and I want to look at some shorter term moving average. So we see the 50 in pink and the 200s up above for us, right? We're going to get this green box off where we're looking at some type of support. And what I'm going to do is close out the 50 and the 200, and I want you to look now at just the short term trend. So we're going to do the 9 EMA, which is a great one to look at for short term trading. The 9 EMA right now is acting as overhead resistance. So you even see in the short term, guys, the trend is still down. So from the short term, that 9 EMA, all the way to that 200-day, it's down. That's why I'm saying don't try to fight this trend unless you're just trying to get lucky and say, I think a whale's going to step in here. Otherwise, this could be some type of nasty, potentially bear flag that could take us deep down, guys. And that's where I just want to protect myself and be careful. And that's why I said, even if you're in profits or whatever, always use those break-even stops if you got enough room. It can really, save you some frustration, because at the worst, you learn something and you broke even. That's just my opinion on it. So that's the 9. And then I also want to look at the 20 EMA, which is very powerful in cryptocurrency. That's also acting as overhead resistance. You can see how we wicked through it. So when people say moving averages aren't important or they're not significant, I would greatly disagree. I believe they're one of the best trading tools, along with support and resistance and trend lines, and looking at those candle formations off support, resistance, trend lines. That's what I like to get into, guys. So now what we'll do, we'll get off all these moving averages right now. I just want to show you that it was all down, and we'll dig into the 4-hour quick. And then I want to get down to where I've been trading and show you what I've been looking at. All right, so the more times we test this bottom, the weaker it's actually going to become. That's another thing that I've been reading a lot about. So it's almost like, and I've heard this, I forget the trader who was talking about this, but I heard this when I was studying on YouTube. It was probably 2 or 3 months back, but they said the bottoms or the tops like this, it's almost like a stone, and if you cast it across the lake, you'll see it bounce, 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 and then it'll just slow down, and then it'll slowly sink down through the water, and that's kind of what happens here. So the stone bounced here, 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 and a lot of times they'll get weaker, and the bounces will get weaker before you eventually drop down. So the more times you touch that bottom or that top, the weaker it's actually going to become. So pay attention to that. Let me throw on our volume here. So on the 4-hour, though, we do have a nice little hammer candle that formed. We're going to have to see if that can kind of push us up above, but on the 4-hour, we would want to start getting up above that $8,085 is going to be a key spot for us that we'd really want to see. Typically, when we do get these little hammers down here, guys, in this area, or a bullish engulfing candle, we do get a little push to the upside. But recently, it's just been followed with a lot of negative downside action as well. So that's on the 4-hour. And you can also see on the 4-hour, the 200 is acting as strong overhead resistance. It's up here around almost $8,700, so we're well below that. And then our 50 as well. So on the 4-hour, we're still below those 2 critical moving averages. And then we'll go into the 1-hour and see what it's looking like. Same deal. The 50 and the 200 acting as overhead resistance, so that's tough. Guys, here's a trend line break that I was paying a lot of attention to, and this was actually on the 15 minutes. So let me show you where I've been trading in at. All right. So I actually took advantage of this big break here, guys. That was good for me. I was happy to have that, but I took my position, I believe it was right around this break up in here, somewhere up in here, around that almost 8,200, I think it was, 8,190, somewhere right in there, and I've just been sitting in that position for now, looking at it on the 15-minute chart. But even on the 15-minute, guys, We had this nice trend line break, so you always want to pay attention to trend line breaks, but even on the 15 minutes, we're still below that 50 and that 200 day, and that's how the trend has to change. It has to start on the 1 minute, and then the 5 minute, and then the 15, then the 1 hour, and work its way to finally get back up above those moving averages. That's what I'm looking at. So in terms of Bitcoin, what I'm trying to tell you guys is just stay cautious, and we'll go back to the 1 day real quick, then we'll get into XRP. I just want to look at a few indicators with you, and you can see also volume tailing off. And remember, whenever you break to the downside, it doesn't have to be on heavy volume like it does to the upside. Now, if it is on heavy volume, that will even confirm that much more, but it does not have to be. The market naturally will fall under its own weight if you don't have those buyers stepping in. Now, in terms of indicators, we'll go through these real fast. Relative strength index, we're looking at 35 right now, so we are not in oversold territory. We're getting close around that 30, but we're not there. This is a trend line that I would draw, that I would want to see us break out of on the RSI. That would be important for us, but right now we're at 35. Looks like we've seen a lot of rejection off there, off that trend line on the RSI. The next one I want to look at is our stock RSI. Stock RSI, we're pointing down. We're at 56 and 61 right now, so a little more neutral in terms of where it's at. We're not in overbought, we're not in oversold territory, so that's a good thing, but we did have that downside cross to the downside right here that I'm looking at, so we have not crossed back up to the positive, and then we'll look at the MACD and we'll move on to XRP. Guys, histogram ticking to the negative, and it's looking like we may have a MACD cross to the downside. It is not confirmed yet. So that's what I'm saying. If you're taking a long in this position, then you're going against the trend, and you're betting that some whale is going to step in at this area and push the price back up fast and aggressively, which could happen, but you want to put the odds in your favor. You don't want to try to buck the trend. That's something I've learned. I just want to teach it to as many people as I can. So that's Bitcoin, guys. Like, subscribe, hit that notification bell if you like Bitcoin, and we'll get into XRP. These are some of the other coins that I'm looking at. Now, XRP at 29 cents right now. What I do like about XRP, and it's different from Bitcoin, let me clear that off, we're trading up above this 50-day moving average, so that's good. And you can even see we back tested it here. So we broke out of it. We back tested it, set a higher low, came back up, set a higher high from this area, another higher low, a higher high. We're going to see if we can set another higher low, then see if we can get up above this 200-day moving average, and also this high around 31 cents is going to be a key spot for us. And what you can also do is throw a trend line on here just to make sure we don't have some type of trend line break. We'll go off the wicks here the best we can. Just a rough one. So this is the trend line that we are following for XRP. And a lot of times, guys, as we're going up and we're having those higher lows, you'll start to get this squeeze in here until we eventually break to that upside, if we are going to break to the upside. Or we're going to have to see if this 200-day moving average is going to act as overhead resistance for XRP. But I do like the fact it's up above that 50, unlike Bitcoin. Other moving averages we want to look at, we're going to look at our 20. We're up above that. We had a cross for over our 50-day with our 20, so that's a good sign. And then our 9, we're up above that. So we're up above the 9, the 20, and the 50. So that's all good signs. We need to get back up above that 200-day moving average. That's the long-term moving average. That's going to be so very important for us. And I want to see what we do with it. Are we going to cut through it real fast on big volume, or are we going to have a lot of overhead resistance with it? Paying attention to that. Now, indicator-wise, and remember this on the one-day chart, let's look at our relative strength first. But XRP is definitely looking better than what Bitcoin is right now, just due to the fact it's up above these moving averages, and you see they're starting to curl up a little bit. That's a sign for you. That's a good sign. But it has to have continued follow through. If we start having a candle close below this trend line, guys, and start dropping down through these moving averages, we could very well back test this 50-day moving average again, and that's going to be around 26 cents. So to the downside, 26 cents. I'm looking to the upside. We need to break out of around that 31.5 cents. RSI, we're at 58, so we're just cruising right there. We've been setting those higher highs and higher lows. We're going to have to see here, though. It looks like it's weakening just a little bit, so we'll pay attention to that throughout the day. Then let's look at our stock RSI. Stock RSI is up in overbought territory. We're at 72 and 75, keeping a close eye on that. And then let's look at our MACD. And MACD, we've had our bullish cross. So if you would have bought at the bullish cross here, you would have bought around 25 cents. And guys, that's a nice little percentage gain. So let's check that out quick. So in terms of our price range, if you would have bought right when we had that cross right here, you're looking at a 19% move to the upside. And that's what I'm saying, guys. When you can figure out these things and look at a MACD cross and, you know, a candle close up above the 50-day moving average at the same time with some volume like we saw here, those are all great signs, and maybe that's the time to jump into a trade with a tight stop loss. And you could even put that stop loss below one of these candles here and look for that good risk to reward ratio. That's what I like to do. I like to look for the good risk to reward ratio. And guys, I apologize, this video is almost 15 minutes, so I'm just going to cut it here. It went a little too long, but what we're trying to do is break this downtrend. We need to get up above this high for XRP and up above this 200-day moving average. Then we could really get moving and maybe even come up here and test this, you know, almost 50 cents, 48 cents. So guys, if you like these, let me know down below. Like, subscribe, hit that notification bell. Appreciate you all being here with me today. God bless each and every one of you. Take care.